With us now to deliver his outlook for Tesla, Fisker, and Nikola is Garrett Nelson, an analyst at CFRA. Great to see you, Garrett. Let's start with Tesla. You have a hold rating on the stock. What's at the center of your outlook here?
Sure. Thanks for having me. We have a hold on Tesla mainly because of valuation. The stock was up over 700% in 2020. We had a buy on it for much of that period, but it got to the point where really we felt like it was fully valued. And looking at the stock's risk reward, we felt it was really more balanced. In mid-December of last year, and really the run-up culminated in the stock's addition to the S&P 500. So, we really like how Tesla is positioned. The stock price run-up has given them a huge cost of capital advantage over competitors. So we like the company, long term, but we just feel like, over the next 12 months, the lion's share of gains have really been made in the stock. So, that's why we have it as a hold.
The cost of capital is important as more competitors are coming to market, right?
That's right. And, Tesla, there are more Tesla vehicles sold in the United States than all other electric vehicles combined last year. And, Tesla has grown their market share from only about 14% of the U.S. EV market 5 years ago to about 60%, which is really impressive. And, we just think they have an advantage over other competitors when you look at the price of the vehicles and the single charge range, which surveys show are the two most important factors in the eyes of consumers when it comes to electric vehicles. They want something that's competitively priced and something that can drive 300 to 400 miles at least on a single charge. And that's really where Tesla has excelled and where the traditional automakers have really failed with their EV offerings over the last few years.
Well, we do have some of these newcomers, and I imagine that having the first mover advantage here is important for Tesla as they continue to drive down some of the prices in certain markets, trying to play with that a little bit and improving the range, while some of these newcomers still have to sort of show off their proof of concepts to begin with and not even kind of roll out these production. We'll talk about that when it comes to Fisker in a little bit, but let's talk globally for Tesla for a second. We're looking at a report from Reuters saying that India may be trying to court Tesla to offer some cheaper production rates if they move some of their operations away from China. What do you see here? Is it likely that they will just open an additional factory versus just moving, or do you feel like it would be beneficial for them to move out of China completely?
So they have the new factory in China, which, has only been up and running just a little over a year now. So, we think their initial plan is to import some of those vehicles into India and start selling in that market. India's electric vehicle market is practically non-existent. Electric vehicle sales totaled only about 5,000 units last year. So, we think Tesla really sees an opportunity to move in and establish the same first mover advantage that they've done elsewhere. And, we think it's a good move. India clearly wants Tesla to have operations in the country, not just sell vehicles imported from China. So, we'll see what happens. Tesla, of course, has two large factories under construction right now, one just outside of Austin, Texas, and the other in Germany, which will really help their sales growth in the coming years. We think eventually they will make an announcement regarding the third factory being in India, probably in the coming months.
Part of it has also been the demand, and we've seen that there's been that demand readily available in China for more EVs. Let's talk more about the supply there and the volume increases. How do you foresee China contributing more to Tesla's overall sales? How quickly do you think it will start contributing in a more meaningful way?
I think we've seen that over the last couple quarters, but really, when you talk about a large manufacturing facility such as the one that they built just outside of Shanghai, it takes a while for a facility like that to ramp up to full production. And so, it's a very large footprint they have. They have the ability to really expand do some greenfields expansion there, in China, and we think that they will do that. China has become a very large electric vehicle market. There were over 1 million EVs sold there last year, and we think Tesla really has an interest in growing in both India and China. Obviously those are the two largest countries in the world in terms of population. But if if Tesla is going to grow their annual sales by a factor of 40 over the next decade, which they said is their goal, to go from 500,000 cars sold in 2020, to about 20 million in 2030, they're going to have to really establish a presence and grow their volumes in China and in India as well.
While they're building out those hardware, for lack of a better term, capabilities and to continue to hopefully, ride the demand, there's also more optimism from some on Wall Street around their software-enabled, sales. Specifically on Monday, Musk confirming that FSD, full self-driving, this subscription program he's been hyping up for a while, was actually launching this year in the second quarter that we're going into right now. How do you measure the success here? I mean, there still are some debates around whether or not this is the right name for these features. He's even talked about enabling all of these cars to become fully self-driving taxi, services if you're not using the cars. Really would love to hear how you look at full self-driving for them.
Sure. So Tesla has really overpromised in terms of the timing. You've seen Elon Musk do that repeatedly over the years. As far back as 2014, he said that self-driving cars would be here in 2 years. So, here we are 5 years after that, still no self-driving car. With each update, they do improve. They do get closer to full autonomy, as we call level 5 full self-driving vehicle. But we still think they're only at about level 3 right now. We are skeptical that they are going to deliver on that promise, as Elon Musk, has failed to do in the past. But we do think they are leading the race in terms of getting to full autonomy. We like their odds of being the eventual winner in terms of being the first company to have a full self-driving car. But we do think there are still some considerable headwinds towards getting there. And the opportunity, the market opportunity is huge. We think what it really would do is give Tesla a huge amount of pricing power in the marketplace. All of a sudden, Tesla vehicles would become sort of a must-have product in the way the iPhone, became roughly 15 years ago when it came out. No one wanted their Nokia anymore or Motorola. Everyone had to have an iPhone. So, we think that's the same sort of opportunity, to make that analogy. If Tesla does come out with a full self-driving vehicle, it's going to unlock a tremendous amount of pricing power. And then you're looking at huge, margin expansion in even more bullish growth opportunity.
I'm sure Elon Musk won't mind you calling that opportunity sort of a must-have. So let's put a pin in Tesla and move to Fisker. I've got some other questions around leadership of all these companies. But Fisker right now, still pre-production, still pre-revenue. We're still not expecting a car until late next year. How bullish, how confident are you on Fisker? They just reported sort of a narrower than expected loss, their first earnings as a public company. I would love to hear your thoughts on them.
So we like Fisker's odds of succeeding. There's clearly going to be a lot of competition in terms of the new players that are entering the EV market. But really, Fisker is one of only a handful of companies that we think will succeed. They'll have that first vehicle, the Ocean, out late next year. Their reservations for that vehicle are already over 13,000. We like their leadership. We like the cash that they have on the balance sheet, which is about close to $1 billion of net cash. And we like the specs of that initial model, and also their business model is a little different than the other companies in that they're forming partnerships with very large manufacturing giants, Magna International, one of the largest auto suppliers in the world, and just announced last week Foxconn, the Taiwanese manufacturer who has worked with Apple on the iPhone for some time. So, we really like what we see from Fisker, and that's why we initiated with a buy opinion last week.
Let's talk more about Foxconn. We recently spoke with Henrik as well on this, Henrik Fisker, on Voices of Wall Street. He's very bullish. He believes that there's a lot of similarities in how the technology, in terms of we're thinking about these cars now as future computers on wheels with Foxconn's capabilities helping the iPhone get to the state where it is now. Are you as bullish to the addition of now their manufacturing capabilities with Foxconn as the company is?
We are. I mean, we think it's a good model because at the end of the day, we think it's going to equate to higher margins for Fisker, to outsource the manufacturing to the Foxconns and the Magnas and not having to do that in-house. It gives them a much leaner model. And, the auto manufacturing business is notorious for very high fixed costs. It's very high fixed cost, low margin business. And so, just that their approach it really distinguishes them from other EV manufacturers. And so that's why we really like their odds of succeeding. Inevitably, a lot of these automakers, will never produce a vehicle. Many will fail, we think. As has been the case for 2 decades now. There are over a dozen EV manufacturers who either had to declare Chapter 11 or never got off the ground. But we don't see that with Fisker. We think there will be demand, and also we're seeing very generous government incentives. We have a very green-friendly administration. We think we're going to see some additional tax credits and very generous subsidies, which will help really boost electric vehicle sales in the coming years. And so we think there's a place for Fisker.
It's funny you mentioned how difficult it is. I mean, Henrik Fisker's first company, Fisker Automotive, really flamed out, according to a headline here from CNN. But he's also worked for BMW and Aston Martin. So if you look at where Ocean might be, do you find that there's, a better chance for the Ocean and the other 4 models, I believe they're trying to roll out, to succeed? And is that a matter of because of the timing of these new cars coming out, or is it because of some other factors?
So we think Fisker, Henrik really learned his lesson from the first go around, and he's much better positioned to succeed. A lot of it was just the timing. The timing wasn't right for electric vehicle sales to really take off, and now we feel like the timing is right. We see electric vehicle sales growing in the U.S. from just over 2% of total new vehicle sales last year to about 20%, perhaps even 25% by 2030. So there's going to be tremendous demand, and we like how the Ocean and it really stacks up to some of the offerings that the traditional automakers are going to be coming out with from a price versus range perspective. So we're bullish on the company.
All right, we're going to move from the hold of Tesla to a buy of Fisker, and now to a sell rating for Nikola. And this is another pre-revenue EV company. There is this sell rating, and I'm curious to see why Fisker would have this buy rating, whereas a Nikola would have a sell rating, given the similarities in just how much they're progressing or not really in the stages of their launch.
Sure. So Nikola is a little bit different. They're targeting the commercial trucking market, and we expect them to have some pretty significant competition there very soon with Tesla, who expects to launch their semi-truck by the end of this year. We also think there's very significant legal risk still surrounding Nikola. Last week they admitted that numerous fraudulent statements had been made by management over the last few years. confirming the allegations made by short seller Hindenburg Research. They have two ongoing investigations. One is from the SEC Division of Enforcement, and there's also an investigation by the U.S. Attorney's Office for the Southern District of New York. And in addition to that, there's class action litigation. So, we weren't comfortable putting a buy on the shares or even a hold for that matter. So, also their initial vehicle model, which they said there would be total shipments of about 600 units by the end of the year. They're now saying they're only going to ship probably around 100 units. So, this is a company we think is going to struggle. Not only are they facing competition from the Tesla semi-truck, but there are also numerous other upstart EV trucking suppliers that they're going to have to compete with. And, we don't see this company achieving profitability at least until 2025, at the very earliest.
Are there any redeeming factors that would make you believe that they could reach that goal of profitability by 2025?
Sure. I mean, we'll see how things progress. They could certainly, surprise to the upside. Expectations are pretty low if you look at consensus numbers. They're a pre-revenue company, and we feel like the valuation is a little high. In light of all these factors. So, we have a sell opinion on the stock, but we'll see how the story unfolds. Clearly, they had some major issues in 2020. The issues surrounding their founder, Trevor Milton, who's no longer with the company, and now they're kind of still dealing with that fallout in terms of the ongoing investigations. But we still think there's significant legal risk. They really opened the door to that by admitting, that there were numerous fraudulent statements that had been made over the years by Milton and other members of management.
Across all three companies and the EV sector sort of as a whole, are there any particular challenges that you see that each of these, that all of them, I should say, face? Battery shortage comes to mind. Leadership, we talked about just now the problems that Nikola has had. You've sort of validated that Henrik Fisker has a good track record, and you're optimistic he'll do well now. But if you think about Elon Musk, he's quite divided between SpaceX and his other sort of pet projects with Bitcoin and Dogecoin and all those kinds of things. So I guess in terms of some of the challenges, let's start there, that all of these companies face. And then if you were to sort of rank sort of the leadership, your faith in the leadership, how would you rank that?
Sure. The real challenge is there's going to be a flood of electric vehicle supply over the next 2 or 3 years. And it's really, for these companies that have no history, haven't sold or don't have a single vehicle actually on the road this year, there's a big leap from going to the development phase, the pre-production phase, to actually bringing vehicles to market. So, that's the challenge, is really gaining acceptance and their vehicles selling well with consumers. We know basically all the traditional automakers are playing catch up and doing everything they can, to bring their electric vehicle markets to market as fast as possible. So there's going to be just a flood of electric vehicle supply. And, as we mentioned earlier, we still think by the end of this decade in the U.S., 75 to 80% of vehicle sales are still going to be gas-powered vehicles. So, there is huge growth opportunity for electric vehicle market, but there's also everyone trying to, meet that demand, in the coming years.
All right, Garrett, thank you so much for spending time with us today. Garrett Nelson, Senior Equity Research Analyst at CFRA. Thank you again, and take care.